Are you in the right if we sold Tesla before, then buy back down? Many did that, but there was one who managed to predict these exact moments. Do you know him well? His name is Carter Worth, and we'll be seeing more of his analysis about Tesla. But before we get going, be sure to like and subscribe for more earth-shattering Tesla stock news. At first, he confidently proclaimed that Tesla's stock was valued at approximately $240. The timing seemed impeccable, but hold on tight, because he swiftly switched gears and recommended buying Tesla stock at around $110. Talk about a wild ride. His market predictions had us all intrigued, but then just when we thought he had it all figured out, things took a turn for the worse. Twice, the stock experienced a significant tumble, as if in response to the previous quarter's euphoric rise. It was like a reciprocal equal and opposite action. We found ourselves pondering the purpose of investing in Tesla after such setbacks. People have been buying the stock between $180 and $210 for the past 2 months, only to see it drop to a daunting $165. It felt like a struggle for the stock to recover, trapping investors' funds and leaving them wondering if they would ever climb higher. But now you might be asking yourself, what's the point of buying into Tesla after such a setback? It's a valid question and one that we've all eagerly anticipated an answer to. Trust me, you don't want to miss this. Into the renowned chart. Master Carter Worth, who made a jaw-dropping revelation, claimed that Tesla shares were about to shift into high gear. Despite the recent downturn, according to him, the stock had reached a historically low point unseen since his EPL. The situation seemed so bad that it might actually be good talk about a risky bet. And here's the kicker back in 2019. Carter Worth accurately predicted the bottom of Tesla stock when it was a mere $13 per share. Can you believe that he seemed to have a knack for timing? Within a week, he doubled down on his position and bought even more shares. And guess what? Tesla's stock started soaring, experiencing staggering 15 increases. Investors flocked back to the company. Now let's fast forward to the present. What does Carter Worth see in the charts? Now, while he believes that the opportunity to invest in Tesla hasn't come and gone just yet despite some short-term gains, he firmly states that the big picture indicates the potential for further growth. In fact, he asserts that those who succumb to short-term thinking may face consequences in the future, regretting their decision when the Tesla reaches new heights, sure. Some may argue that the opportunity's past and that it's too late to join the Tesla train, but here's the thing. While the stock may have had its ups and downs, it has surged over tenfold since 2019. Now, it's still 10 times higher than its humble beginnings, so rather than falling into the trap of thinking the opportunity has slipped away, work suggests finding a middle ground. Take some profits from the gains made so far and leave the rest to reap the rewards of the potential future growth. Remember, folks, this mind-bending journey through the ups and downs of Tesla stock demonstrates the unpredictable nature of the market. Short-term gains may entice, but it's the long-term perspective that truly matters. And don't be one of those individuals looking back in 2030 and wondering what could have been embraced. The excitement, the risks, and the potential rewards that investing in Tesla can bring. However, this approach denies you the opportunity to experience compounded returns, leading to significantly lower gains than you could have achieved. This is one of the reasons why actively managed funds often underperform the market by cutting their winners too quick. They miss out on substantial growth. Let's take a closer look at a perfect example. Cathie Wood, in her infatuation with Tesla stock, has long been Cathie Wood's favorite position to get her fund. ARK investment returned a staggering 4.44. If I were to show the number to my Taiwanese-Canadian wife, she would consider it fun. In Chinese, the number 4 sounds like the word die, and seeing triple death in the performance figure can be quite ominous. Although Cathie Wood has made insightful remarks about Tesla. The stock soared by 741%, while ARK investment suffered losses during the same period. This outcome can be attributed to cutting winners too soon. Carter added that anything is possible in the stock market, but I've observed over the years that when price targets are excessively extreme, they lose credibility. When I publish notes for hedge fund managers, pension plans, or families, they often question my optimism if I were to claim a stock could triple from its current price. That's why I aim for price targets that stretch the boundaries of imagination, but still remain within the realm of possibility. Maybe Dan's imagination suggests $60, but it might just be an outlier. This situation highlights why it's essential not to rely too heavily on hedge fund managers and analysts. When it comes to price targets, they often operate based on adjustments to please their audience rather than on objective reality. If you prefer a higher price target, they can accommodate you. If you'd rather see a lower price, they can adjust accordingly. Unfortunately, this approach prioritizes appeasing people over outperforming the market, to be clear. This isn't the case for every hedge fund manager or analyst, however. As Dan Nathan himself admits, there are many who operate in this manner. While there's nothing inherently wrong with this approach, it isn't grounded in truth or reality. Instead, it caters to the limits of one's imagination. If you've never witnessed the stock doubling or increasing tenfold in a short period, it's easy to fall into this mindset of setting lower expectations. Fossil dive, a long-standing enigma, has remained unsolved for ages, leading many to believe it's an insurmountable challenge. But let me tell you, my friend, such thinking will only limit our potential. Just because no one has ventured into the realm of electric vehicles before doesn't mean they're impossible. Remember, groundbreaking ideas often emerge from defying the odds. Now let's dive into the heart of the matter when discussing Tesla's progress. It's essential to discern whether we're solely considering its stock price or if we're delving deeper into the margins and cost-cutting efforts. Are we fixated solely on the technical aspects of the stock trading? Well, my friends, this recent sell-off is the antithesis of what transpired in the previous 2 years. We have a stock that no one seems to believe in, yet analysts keep revising their price targets upwards. Guess what? The stock keeps the flying exportation soaring higher and higher. But let's take a moment to reflect on the great true revelation, if you will, the highest multiples. My dear managers are often attributed to companies before they start reaping substantial earnings. It's the realm of biotech and technology stocks that have to make a profit. You see, it's all about dreams, aspirations, and the limitless potential they hold. However, when you begin producing cars, earning tangible profits and establishing real margins, James alone won't cut it anymore. It's time to face reality. Now here's where it gets fascinating. Suppose we dare to trade it into the realm of reality. In that case, there's a chance, perhaps even a strong possibility, that earnings might temporarily hit. How do you ask? Well, Tesla could opt to reduce prices further, strategically impacting short-term profitability. And here's the twist. My friends, with lower earnings, the stock multiple might just sound counterintuitive. But trust me, there's a method to this madness. But let's shift gears for a moment and explore the realm of dreams. Tesla, dear investor, still has countless dreams to offer. I wholeheartedly believe will come true. One that stands out beckoning from the horizon is the Cyber truck. It represents the epitome of futuristic driving, and while investors may have lost some confidence in full self-driving capabilities, that's precisely what works in our favor. You see, there's no assigned valuation for that aspect of Tesla's business, effectively lowering the stock's price, and that, my friends, is an opportunity to accumulate more shares in a bargain. But wait, there's more. Tesla's energy storage business's foray into the dojo holds immense potential. Elon Musk himself mentioned on the latest earnings call that it would be a multi-hundred-billion-dollar opportunity. Granted, it may be a long shot, but let's not dismiss it entirely. Who knows? The valuation of Dojo alone might eventually rival Tesla's current worth. And speaking of dreams, turn to reality. The next-generation vehicle awaits, promising affordability and unmatched values. This, my friends, is not a pipe dream. It's an inevitability. And there you have it, ladies and gentlemen. The journey through the highs and lows of Tesla stock has been nothing short of a roller coaster ride, from the bold predictions of Carter's worth to the wild fluctuations in price. We've witnessed the unpredictable nature of the market, but amidst the uncertainty, there's a glimmer of hope for Carter's chart. Master himself sees potential for Tesla to shift into high gear despite recent setbacks. He believes that the stock's historical low point could be a turning point for a remarkable growth. Thank you for joining us on this thrilling journey through the world of Tesla stock. Don't forget to like and subscribe for more earth-shattering Tesla stock news. And as always, happy investing.